G'day folks, Jim here from Orchard Forex. It is Monday the 11th of May. I thought I'd do a quick outlook on the markets today, given that many economies are now seeking to come out of the pandemic lockdown period. Most of the action still appears to be in the stock markets and also in oil, while the FX markets remain choppy and volatile, but really without too much direction. In economic terms this week, we see the RBNZ meeting, which given the global injection of liquidity to prop up the system recently, including by the RBNZ, should be more of an update of where things currently stand, but with no change to policy expected. There's going to be a fair bit of US data. Much of it's going to be coming out on Friday, and that'll be awful. But this seems to be largely priced in, and any surprise could be to the top side as economies start to get back into gear after lockdown restrictions are lifted. Ahead of Friday's US data, there's some important monthly inflation data due tomorrow, Tuesday, from both China and the US, each of which are expected to dip into negative territory, readings of about minus 0.6% month on month. Anyway, enough of that. We'll go and take a look at the markets. Okay, so here we are. This is a 4-hour chart of the S&P. I have to say things look reasonably positive for the stock markets at the beginning of the week, despite all the concern about the direction of the global economy in the coming months. The 4-hour charts are looking to point higher. The dailies are neutral, but maybe slightly positive. But in the longer term, the weeklies really look as though they want to push on up. Last week, the finish of play last week, we're up here where this grey line is. Now, as you can see, we're back above the 100 and 200 week moving averages, which has got to be a positive, I think. And so I'm kind of looking to push higher. I'd be looking, if we go back to short-term charts, as far as the short-term trading goes, I would be a buy. You know, we could see a dip back down to this 100, 200 hour moving average at some stage. Now that's 50 points away, but I would be looking to buy on dips with a stop loss placed below where this rising trend line comes. On the top side, the initial target, of course, is back up here, this 2960 level. So really looking to buy down around here, 2900 perhaps, 2880. Looking to as I say, to break up to here. Beyond that, it seems tricky at the moment. But certainly, I guess beyond there, we're looking to head back towards the 3000 mark. As I say, the weekly charts do look as though they're positive. They look as though they want to go higher. So I'm looking to buy dips. The Dow, I have to say, that's got back above the 200 week moving average, but it's yet to cross the 100 week. So just be a little bit careful there. But having said that, the charts generally do look positive as well. So all things being equal, I'm looking to buy dips. While I'm here, I'll go and have a look at the ASX. That is showing some kind of signs of recovery. It could have some decent upside potential, but at this point in time, I'd be a little bit cautious. But I still prefer to be long. The dailies, we're struggling here really at the moment with this 38.2% FIBO level, and there's not an awful lot of upside momentum in the daily charts. So it may be that we just see a slow drift higher. But as I say, the weeklies, sorry, beg your pardon, the 4-hourlies are also looking flat. So I'm not looking for too much, but just in association with the US stock markets, I think we probably get dragged a little bit higher in the next couple of days. Heading on towards the oil market while we're here. Now, oil's also opened up with a little bit of a gap higher this morning. This is just a 1-hour chart, and we can't really read an awful lot into that at the moment. The 4-hourlies are looking as though they're trying to turn a little bit higher, but really you'd have to put them in the neutral territory. but the dailies look positive, and if we can take out this 55-day moving average here, then I think we can move back up to the 38.2% FIBO level. That comes in at around $29. So the weeklies are also turning higher. So it looks to me as though we're going to start the week with a general sort of risk-on sentiment. That should help the Aussie dollar out. But yeah, stock markets and oil do look high. We'll go and have a look at the Aussie in a minute. They both look as though they're turning slightly higher, but we need to keep stop losses in place because the global economy obviously is in a very dire situation at the moment, and volatility is going to remain fairly huge, I think. What should we go to next? We'll go to the currencies, and starting off with the Aussie dollar. That's pushing up against the 100-day moving average at the moment. Let me just blow that up a little bit. We really need to close if we can see I suppose if we can see a daily close really above sort of 65.5, that will give me added enthusiasm to be long the Aussie dollar. 65.30 is where the 100-day moving average does come in. The dailies do look a little bit neutral at the moment, and possibly running out a little bit of steam on the RSIs. The weeklies do look positive, and I think we could see this continuation of this squeeze up towards 66 cents this week, but a lot depends on the outcome of the US data and risk sentiment. So while I'd be cautious, I still prefer to buy the dips. As far as the majors go, I think I'll probably leave them alone for the moment. The euro is all over the place, but really doing not an awful lot. It's volatile, but it's tracking sideways, and I'm not getting much inspiration from that at all. Dollar yen is looking a little bit more positive as risk sentiment improves. I think possibly we can head higher. Dollar yen is currently trying to struggle back above 107 at the moment. So one of the things I do like and I'm long of is Aussie yen. We'll go and have a look at that cross. Okay, so here we are with an Aussie yen chart. It's not showing us an awful lot on the dailies. The 4 hourlies do look slightly positive. Now we are coming up against FIBO resistance here at last, or when I say last week, the recent high just above 70. If we can get above there, though, I think that there may be a fair bit of upside with not an awful lot to sort of 71.5, and then potentially even 72.5. And as I've said before, if we're looking at this, which I have been watching, it looks to me like a major, well, quite a major reverse head and shoulders. We've been chopping sideways for a week or two now, but personally, I think we can potentially move back up here. The strength in the Aussie will come about, if it does come about, with a continuation of the rally in the stock markets. So that could turn into reverse at any time if the global economy starts to take a downturn. So I keep stops tight, but I do prefer to be long this, looking for a retest of this level, and then the 100-day moving average, which comes in at sort of 70, just over 71, and these highs here, which come in at sort of 71.5. So we'll leave it there for now. I don't want to do too much. I think keep gearing levels low and keep stops tight is the name of the game. So anything interesting during the week, we'll put out another video then. Cheers.